What if you could invest in a fund that isn't restricted by market caps, one that goes wherever opportunities truly lie? And what if this flexibility came from a boutique investment house known for its high conviction, research heavy approach to equity investing? That's what the Abakkus Flexi Cap fund claims to bring to the table. But does a fund built on conviction automatically translate into better outcomes, or does such freedom also comes with unique risk investors should think about? Let's unpack this in detail in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what is a flexi cap fund is about. So, a flexi cap fund is a diversified mutual fund that can invest across market capitalization without any restriction. They give the fund manager full flexibility to shift investments depending on market conditions. So, the performance depends a lot on how well the fund manager navigates different phases of the market. So, now before analyzing again, let us first understand a few basic details about the Abakkus FlexiCap Fund. So as an NFO, it opens on 8th December 2025 and closes on 22nd December 2025. So some of the key features of the fund are: it is an open-ended fund type which belongs to the category of equity FlexiCap. It has BSE 500 TRI as its benchmark index. It has an exit load of 1% which will be charged for redemption within 3 months. There is no entry load, and the minimum investment amount required to invest in this fund is 500 rupees. So the fund manager for this fund is Mr. Sanjay Doshi, and according to the riskometer, the risk involved in this fund is very high. So the primary investment objective of this fund is that it seeks to generate capital appreciation and provide long-term growth opportunities through equity and equity-related instruments by investing in a diversified portfolio of large cap, mid cap, and small cap securities. And the secondary objective is to generate consistent returns by investing in debt and money market securities. So now, as we have a basic idea about this fund, let us now go through an analysis part of the video where we are going to take a look at the pros and cons of investing in this fund. So let us start with the pros, the advantages. So now, number one, the flexi cap mandate lets the fund invest in large, mid, and small caps depending on where the team finds value. This adaptability can help the fund shift gears across market cycles instead of being locked into one segment. Number two, Abakkus is known for its quant plus qualitative stock selection framework. For investors who appreciate disciplined bottom-up research, this structured approach can feel reassuring. And number three, instead of spreading across too many stocks, the fund may hold fewer names with stronger connection. This can amplify returns if the calls are right, though it also increases responsibility on stock selection quality. And number four, the investment style emphasizes companies with strong balance sheets, high ROCE, and consistent cash flows. Such factors can help filter out weaker businesses and focus on long-term wealth creation candidates. And number five, for investors who believe that skilled managers can outperform through careful selection and patience, this fund's philosophy aligns well. Its long-term, research-led approach is designed for those willing to stay invested through cycles. So these are some of the advantages. However, there are some disadvantages as well. So let us take a look at the cons now. Number one, being a newly launched fund, there is no historical data to assess how the strategy behaves in different markets. Investors must rely purely on the AMC's philosophy and past reputation, not real fund performance. And number two, boutique AMCs often revolve around a small team or a star manager. This means the fund's success may heavily depend on the skill, consistency, and stability of the key individuals. And number three, A concentrated, conviction heavy active strategy comes with higher volatility and deeper drawdowns at times. So, anyone seeking predictable or low risk returns may find this approach uncomfortable. And number 4, high conviction portfolios naturally reduce diversification across sectors and stocks. While this can boost returns, it can also increase exposure to specific company or theme risk. And number 5, Abakkus is respected in PMS and AIF circles but is still new in the public mutual fund universe. So investors may want to watch how the AMC handles scale, compliance and broader AMF execution before committing heavily to it. So these are some of the disadvantages that we need to keep in our mind before deciding to invest in this fund. Now, what is the final takeaway? Is the Abakkus FlexiCap fund worth or not? So, is this fund a fresh, research driven, active approach worth watching? Yes, especially for investors who believe in high conviction investing. But is it also a fund where managers' skill, execution discipline, and long term patience matter even more than usual? Absolutely. And with no performance history, should investors take their time to observe before forming judgments? That's often a wise question to ask with any new fund. At the end of the day, this fund is simply another tool, neither automatically superior nor inherently risky. The real question is, does this style of active, conviction focused investing align with your temperament and time horizon? So, our personal recommendation is that if you do want to invest in a flexi cap fund, instead of investing in NFO like this, you can choose to invest in existing mutual funds that have a track record of a minimum of 7 to 10 years, where you can analyze how it has performed in highs and lows and be able to take a calculated risk. Because as an NFO without proper portfolio and research, the investment here is risky. It will be like taking a blind risk. But if you still want to invest in this particular fund and just to see where it goes, you can invest it with a minimum investment amount as a trial basis through your satellite portfolio. And over the years, if it performs well, you can increase the investment amount accordingly. But still, if you need some kind of professional guidance, you can definitely consult with a professional financial planner who will look into the fund's suitability on factors like investment objective, risk profile, overlap ratio, and allocation, and see whether that aligns with your goals, your risk tolerance, and the time horizon for those goals, and strategically help you and guide you into making much better decisions which can transition towards better outcomes as well in the near future.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.